Hey guys, how are you? Vladimir here, and this video is the second part of the sRs Pro education. It was supposed to be a live webinar, but unfortunately, as my computer broke down, I couldn't hold a live event. So as I promised, I will record a full detailed video and upload it for you. So here we go. This is the one. This video we will discuss about the entries, and you should know all the possibilities sRs Pro brings to you and everything basically you can use in your trading. So know your entries is a very important part of a full control of the sRs Pro. Today we will talk about the pre-analyzed part, how important it is pre-analyze the market. When I say the market, I mean the instruments you want to work with. The reason for that is very simple. When you come prepared in advance in the instruments you want to trade, those who have clear trending patterns, clear trending structures, those would be the instrument that will have the better odds for you to end up as a winner. Will that guarantee a profit? Of course not. But in the trading business, we are talking about numbers and improved probabilities. You always will have higher odds to ride proven trend, to ride clear patterns and structures, and to ride the instruments that have the momentum and have the volatility in them. So pre-analyzing will save you lots of time in trading. That's of course correct always, but especially when you are trading the short term. Basically, pre-analyze will allow you to know the directions you trade and to know directions you do not trade. If the euro dollar is in a clear structure for buys based on, let's say, multi-time frame analysis, and you suddenly receive a sell alert, you know you should skip it. Why? Because the higher time frame would be as you analyze to the upside. This is of course just an example. Okay, it doesn't mean you have to go and trade the euro dollar now. So it's very important to understand that it helps you not just to focus on what to trade, but also helps you to basically eliminate and kind of isolate yourself out of the trading the bad directions. Those who the directions that did not confirm a real trend. We will discuss about the sRs Pro, the ABCD pattern, both classical pattern and the one that has equal lows or highs. We will also cover a very important additional part. This is the triangles and ranges. I'll give you the extra tips and mainly to do and not to do. Okay, so let's start the pre-analyze part and what comes with it. So why do you need to pre-analyze the market? As we discussed a minute ago, the idea of pre-analyzing the market is to choose, it's like a GPS. It gives you your possible roads to reach the final destination quicker. Okay? There are roads that are with traffic, heavy traffic, closures or whatever it is, and there are those roads that will help you to reach your destination quick. Same with analyzing the market. You choose the instruments that have the trends, that have the clear patterns, have the clear structures, and will help you to choose the trades with the better odds. So it will basically help you to find the pairs and the instruments. Of course, it could be not just Forex, commodities, indices, stocks, cryptocurrencies, everything that enjoy clear trending pattern and momentum, high volatility. Okay, it will help you to find the reliable trends, and also it will help you to avoid wrong directions. When you know an instrument is traded clearly in a bearish direction, you know you should be looking for sell, not for buys. Okay? So, as mentioned, not just help you to find reliable trends, but also helps you to avoid the wrong directions with lower probabilities. It helps you to join the current momentum and sentiment of the market, of the instrument you are looking to work with. It improves your ability of trading at the right time. Meaning it improves your timing of taking actions. Timing is everything, you know that. Timing is everything. Not just in trading, of course, and anything in life. It is a real art and a real talent to be in the right place at the right time. So when you know to spot a correct pattern of trading, it simply improves your timing to join the trend as it goes, and it improves the odds that at the end of the trend you would end up with profits. It also would, of course, provide you higher accuracy setups according to the technical tools that we will just discuss about. Okay, and mainly it will help you to avoid trading against the trend too early. As you know, and that's not a secret, if you think about it this way, how do majority of new traders think? If anything goes up, it has to go down. And if anything goes down, it has to go up. That's what traders think like, right? So most of the traders are busy with catching the edges, right? If it goes up, 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 it has to go down. So traders sell, right? And it's a mistake, because if something goes up, why would it stop? Just because someone wish for that? Or just because it was found some resistance or trend line or anything? No. Okay? You might know that already, but to find a reason why to execute a trade is one of the easiest things one can do. There is always a reason to be involved in a trade. Always. And I mean always. There is always a resistance, always a pivot, always a candle pattern, always a level, always a tunnel, always a trend line, always moving average cross, always stochastic oversold, overbought. Should I continue? You got the idea. There is always something. If you try not too hard, you will find a reason to be in a trade. As you know, I hope you know that. If not, this is a great thing to know. Professional traders, 90+% of the time, are busy with pre-analyzing, are busy with preparation, probabilities, scanning for the risk versus the potential reward, all the reasons why not to take a trade, and less the reasons why yes to take the trade. Why? Because there is always a reason to be in a trade. Always. Okay? So that pre-analyzing thing would help you to avoid trading against the trend too early. Selling because it goes up is wrong before the market gives you the signs. And it's important to understand that. So let's continue then, and let's talk about the trending structures. So first of all, what is a trend? Trend is a series of highs and lows pointing to the same direction. In an uptrend, we have high 1, high 2, high 3. They all are pointing up. Low 1, low 2, low 3. They all are pointing up. So series of higher highs, higher lows, it's an uptrend. 3 of each. Of course, same is applied to the downside. 3 lower highs and 3 lower lows define a downtrend. After that, most of the time, the market is reacting with a correction. Correction, as a rule of thumb, comes within two options. One option is two waves, which we call A, B, C, D, or ranging pattern. It could be a flat range, horizontal. It could be triangle, a flag pattern, a channel. Okay, you name it, a wedge, you name it. Okay? It goes symmetric triangle, ascending triangle, descending triangle. Should I continue? No, there are a lot of patterns. We'll discuss about their characteristics, but it's important to understand the options. So, two waves correction after trending condition is very, very logical and normal. And this is what we call trend trading, because at the end of that, we would want to join. If it's the break of this trend line, or if it is by going to lower time frame and find the new structure and then trade it. Okay, but from here, we assume that it holds, of course, as long as this low holds and not invalidated, because if we break below, it invalidates the whole trend idea. Right? But we know that once we got this pattern and structure with our signs, we can expect trend continuation. Same with the range. If we got a bullish trend and then we entered any of the ranging structures, break out of it should lead for trend continuation. And I mentioned before, it helps you to identify the it helps you to avoid trading the against the trend too early, right? What does it mean? If you try to buy here or here or here, here or here or here, you might fail because the market didn't retrace. So when you see, let's say the pink one is the higher time frame. It doesn't matter what higher time frame means. It could be anything: 4 hour, daily, weekly, monthly, or even 1 hour. But that means the higher than you plan to trade. Okay, and you see that you have a big downtrend at on the higher time frame, and then on the time frame you trade, one lower time frame, is basically you see that the 3 higher highs, 3 higher lows. This is what brings normally the correction we discussed about. Remember what we discussed about? After 3 lower highs, lower lows, what happens? Corrective cycle. Corrective cycle could be A, B, C, D, or triangle. So if this is the first 3 higher highs, 3 higher lows we got, this might be just one leg. I should draw it actually pink because it refers to the same time frame. One leg, correction, and continuation. And it will build up the 2 waves, which will be corrective of this trend. Okay? So as you can see, this could be the first leg within these 2, and they might be tradable if the lower time frame creates the higher highs and the higher lows, and then 2 waves correction. Okay? Of course, those of you who know to apply divergence trading inside, fantastic. Those of you who are in Traders Academy Club, you know what I'm talking about, because we do that every single day in the live trading room, right? Those of you who also have the Divergence University as well know to apply that. Why do divergence help you? And this is something that we will learn in a third webinar of the sRs Pro. But why does it help you? Because it helps you to spot these probable scenarios of turnaround. And you will understand that it doesn't happen here or here. It happens when a big divergence would appear. And it's very, very helpful in our trading. So, if you don't know divergences, by the way, no worries at all. You will get a taste of it in our third advanced webinar of sRs. And those of you do, fantastic. It's definitely something to work with. Not just for sRs, in your trading generally. So how we discussed about the uptrend, the downtrend is exactly the same, just a mirror to that. Okay, so 3 lower highs, 3 lower lows, then 2 waves correction, or a ranging correction, and break out of it, and we can expect continuation. And if we trend against the higher time frames, no problem. So we first of all verify a potential turnaround. That means lower highs, lower lows in the lower time frame, corrections and breakout. And then we are able to trade 1, 2 of the corrective waves of this trend. So basically the same I explained before on the uptrend, just a mirror. Okay. Now I don't want to mention here, it's very, very important. If you have any questions about anything, do not hesitate to ask me or my guys or the more experienced traders in our SRS Telegram channel. Okay? If you don't know or where to access to the Telegram channel or not in yet, at the end of this video I will explain where it is. So let's continue. That's the pre-analyzing, and I would like to show how that looks like, all the things I just explained. So first of all, how do we identify trend? Let's go quickly over that. Higher highs, higher lows. How do we identify correction? A, B, C, D, 2 waves retrace, right? And after it finishes, we assume for continuation or a range, right? And then with the breakout, we expect continuation. So first of all, trending condition, then corrective conditions, and the third thing, the breakout, right? That what helps us to understand how it all works like. So, for example, if you think about it, let's say we identified here the daily chart, okay? Then we went for corrective cycle and we broke to the upside. After that moment, we assume the trend is continuing. And as long as there are no signs against us, we can go to the lower time frame and to look to trade in that direction there. That means in a bullish trend. The daily gave us the bullish trend, so we expect the trend continuation, bullish trend pattern, okay? And it's very, very important to remember and understand. Of course, it's the same with the range. After the breakout, we can go to lower time frame and trade these rallies. And this is what I meant by trading against. We have a big cycle against us, big bearish trend, 3 lower highs, 3 lower lows. We expect here corrective cycle, and this first leg of the corrective cycle would be broken into 3 higher highs, 3 higher lows by itself. Then 2 waves correction, breakout, and it's tradable. Okay, first one and second one. Okay, so the first leg of this bigger time frame would be represented perfectly as a trending condition by itself on the lower time frame. Okay, and that this would basically build the first leg of this corrective cycle. And here is how it looks like on the move down. So first of all, we define the bearish trend, and we do that by lower highs, lower lows, at least, of course, 3 lower highs, lower lows. Then we expect a corrective movement, which could be 2 waves, like here, A, B, C, D, and we will discuss about the A, B, C, D next, or a range. And again, I would like to repeat, range could be anything, symmetrical triangle or ascending or descending triangles or a flag or any other pattern you would like, including the flat ones, and I will show that in a moment. Okay, so we expect a corrective cycle, and with the breakout out of it, we expect a trend continuation. Okay, and that means once it happened on the lower time frame, we would be able to trade that. So we would know to wait for the directions, for the setups in that direction. Okay, and as long as we will not have the signs against us on the higher time frame, we are free to ride the trend. The trend is our friend until it did not show signs against us at the end. Okay, so and now how do we trade that idea when the higher time frame trend is against us, more aggressive approach? So let's assume the yellow line is, for example, the daily, but right, it has a bullish trend. We expect some corrective cycle, right? And the question is, can we trade it? So if the first leg of the corrective cycle is a trending structure by itself on the lower time frame, like the 4 hour, for example, or even 1 hour, 3 lower highs, 3 lower lows, the waves correction and breakout, boom, we got a trend against on the lower time frame. And this is where it connects into the corrective cycle. It's important to mention that this is more aggressive as you are against the main trend, but it's still tradable, and if done properly with a good risk reward management and a good clear read of the price, the chances are with you. So that's the pre-analyzing. Now I would like to discuss about the ABCD pattern. So the ABCD pattern comes in one of the two ways. A classical ABCD, or also known as a 1, 2, 3, 4 retrace, or equal low or high, and we will see that soon in both examples. So ABCD is a corrective cycle. Some traders also name it 1, 2, 3, 4. It could appear in a classical way, always equal low or top. It is considered much more reliable when it appears after trending conditions. Meaning, if you see one move and then ABCD, it doesn't tell a lot. But if you see trending conditions and then ABCD, it will have much more value for you and much more probabilities to trade. Okay? If you have one move, ABCD, one move, ABCD, the next move, you don't know what's going to happen. And that's where the market starts to zigzag normally, right? Break above or below the ABCD pattern considered as a high probability trend continuation. So let's have a look on both possibilities. I will talk about the uptrend. The downtrend is the same, just mirror. Okay, so I'll mention that quickly. So we have higher highs, higher lows defining the uptrend, 3 of them. Then we got ABCD. Most important thing to pay, well, it doesn't look like a D, sorry. Most important thing to pay attention to is A is higher than C, B is higher than D. Or C is below A, D is below B. 4 points that go to the downside. Okay, lower highs, lower lows in 2 waves. Okay, remember that. And the other one is the equal low or almost equal low. Sometimes it's like few points even higher. It looks like that. A, B, C, D. So the question is, can we use anything like that? The answer is yes, and I will explain when and how, what are the strongest thing here. Same exactly applied for the downside. First of all, we define a downtrend, and then A, B, C, D. Now, in a downtrend, the ABCD is a corrective cycle, so it is against the downtrend before, right? It's going up. D is above B, C is above A. Okay? So, the ABCD is against the trending structure. Okay? 4 points, 2 higher highs, 2 higher lows. Okay? And of course, also possibility of a flat correction, ABCD, where B and D are almost equal, could be even slightly below here, no problems. I will explain in a second where it is used. That's how it looks like. Now let's take a look at the reality. So, let's see the classical one first of all, and then I will explain the 2 scenarios where the non-classical ABCD could be applied. The first one, pretty speaking for itself. 3 higher highs, 3 higher lows, 2 waves correction. Easy, right? A, B, C is below A, D is below B, breakout, trend continuation. 3 higher highs, 2 waves correction, breakout. Downtrend, 3 lower highs, 3 lower lows, A, B, C, D. D is above B, C is above A, breakout, trend, continuation. And now two conditions where the ABCD in a not classical form with a equal lower high could appear. So the trend condition first of all, right? 3 higher highs, 3 higher lows at least. And then here is what we get. Correction, first leg, correction, and second leg. The second leg is slightly lower than the first one. So here is the tip. As long as the higher time frame, so let's say this is the 4 hour, check the daily. If the daily is clear trend without obstacles against you, like resistances, trend lines, divergences, right? Nothing against you, boom, you have your chances. Fantastic. Second and main tip is pay attention to the swing points of the trend. So that's your uptrend. Your swing points are here and here. If they were tested or ideally falls broken, classical, you have a great probability for trend continuation. So as you can see, this is the swing low, cleaned, and then creating sort of double bottom, classical breakout, trend continuation. Okay, so I call it clearance zone. You can call it swing lows, doesn't really matter. The idea here is trending conditions, broke, retraced, you got a immediately good sign, like boom, you know something is happening. And if the ABCD is created afterwards, fantastic. Okay, next condition is in that example it will be to the downtrend, but of course it could be applied also in the uptrend. So 3 lower highs, 3 lower lows, 2 big ABCDs, as you can see, classical ones, right? We got here A, B, C, D, classical rally, D above B, C above A, fantastic, broken, and then retested, and a new setup where now the D is a bit lower or equal to B, right? So this is the new ABCD. So can we trade the break of this trend line? Of course we can. So basically what happened here, we got already the ABCD, the classical pattern. It already broke down, then retraced, recreated a new opportunity for us, and here we can enter again. So here comes the question, can we trade that? Yes, your original trade is already in play, right? This was the breakout, protection, take profit. And as long as it is in play, inner ABCDs could be also applied and traded. Well, assuming you are not in a trade already, because you do not want to overexpose. So that's the conditions where the ABCD patterns would be applied. And now I have a question for you. I promised a test, right? So while you think about it, here is my test for you. Here the ABCD was broken. Now we got another ABCD. Assuming there are no signs against on the higher time frame, can that be traded? Same thing I want to ask about the breakdown. We broke down here. Immediately recreated another pattern. Can that be traded? Next question. Well, you can of course pause the video right now, think about it, and to listen to my answer in a second. Now the next one. We broke this to the upside, and now recreating ABCD with like almost equal lows, not a classical one, and another breakout. Can that be traded? And then that. Of course, assuming the higher time frames are still free to go. Okay? In the analysis we did. And the last question is, can, after this one, can that one be traded as well? Again, assuming no signs against on the higher time frames. So while you are thinking, I invite you to pause the video, and here are my answers. Yes, 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 and again, yes. Okay, there is only one thing which I do want to mention, and this is about this yes, because here it was already not classical ABCD, it was equal lows, so another equal low later on would be more suspicious, useful if the higher time frames are free to go, but more suspicious, and treat it like that. It's a bit more aggressive setup. Okay, so I hope you answered it properly and correctly, and I wanted to show you these examples, how a trade could be developed in a trade on the go after the first one appeared. Triangles and ranges. Very, very, very popular subject. A lot of traders use that and love that. And no problems with them. I love them as well. When they're classical, they're classical. So let's see how it looks. So move up. Inner moves where highs are going down, lows are going up. Lower highs, higher lows. The key in a triangle or any other ranging pattern, you got at least 5 spots before the breakout happens, and the breakout happens, let's say, after the 2/3, right? That's 66% of the triangle. So if this is the half of the triangle, half from the time, right? Then you want the breakout as much as possible on the at the end, okay? Or at least not the beginning, because if you get anything like sorry, bad drawing, sorry. Again, bad drawing. If you got anything like that, as you can see, you're right at the middle way. Not good. Okay? So you want it to be as late as possible within the pattern. And the 5 spots, because sometimes traders, when they see that, they call it triangle. No, it's not. No, it's not. It's not a triangle. 5 spots at least. And here is another thing. When you go, my suggestion. The classical triangles are those that on the lower time frame, each of these leg you would be able to see as 2 waves. Sometimes you will see it in 3 waves. Movements. Okay, so it's clear on this time frame, but if you go lower, you would see here it's broken into 2 waves, each of the legs. Okay, of course, same to the downside. At least 5 spots, and ideally you can verify each of these legs like 2 waves on the lower time frame. Okay, now let's take a look how range looks like. The conditions for range, first of all, kind of horizontal range, right? Flat range. First of all, a condition is like a false breakout in the same direction of the previous trend. So if it's up move, first false breakout is on the top. Then a little false breakout on the bottom. Could be one or more two false breakouts in this range. But the idea here is the same. You got 1, 2, 3, 4, 5 spots at least. And then the breakout. Between 5 and the breakout, you would also see gaining momentum, so increasing speed and bigger candles. Same here on the bottom. 1, 2, 3, 4, 5. First false breakout in the direction of the main trend. Second false breakout is against, and that creates for us a flat correction, 5 spots. So now examples. So here is an example of a bullish triangle, push to the upside. Also in that case, trending structure. We got here this pattern. Also, of course, we can work with that. Then, even if it's one leg, no problem, as long as the higher time frame is us. Then 5 spots inside, right? More than 66% breakout. And look what happens here. If you go lower, you would probably be able to see very clear two waves inside each of the legs. Okay, it's not like a mandatory if the higher time frame is a clear trend, but it just increases the probabilities. So that's pretty much it. And to the downside, we have a classical trending condition. You can see, I don't need to explain here the lower highs, lower lows. 5 spots inside a play here, 4 and 5 is the breakout. And a beautiful combination, as simple as that. On the lower time frame, you would be able to see that the market is working here in this kind of wave. Okay, so pretty classical. So that's how the triangles look like, and that's how ranges look like. Okay, first of all, the trend, as you can see, one false breakout on the top in the trend of the direction of the trend, sorry. Another false breakout, and we have 1, 2, 3, 4 spots inside. 5 is the breakout. Here we would see the breakout and the holding momentum above that. Same happened later on with a false breakout here, right? 1, 2, 3, 4, 5 breakout. Again gaining momentum, bigger candles holding above. And the direction to the downside, downtrend, false break, 5 spots inside. 1, 2, 3, 4, 5 breakout holding below. False break, one more false break, as I said before, 2 more would be acceptable as long as they are within this range of prices. And then between these spots you can see the candles are gaining momentum, holding below. Classical flat range. And that is how triangles and ranges are found. Again, in trending conditions, they will always have better chances for you, better probabilities, and higher chances, especially when the higher time frame is the one that defines the trend for you, and then on the lower you find the setups. Simply fantastic. Now, I would like to share several tips. Remember, higher time frames trends have better odds. Right? Traders love the intraday, majority of traders, especially the new ones. I don't blame you, don't blame them. I used to be the same. The action, the moves, every single move looks like a possible way to make money, but higher ones have better odds. If you love to trade lower time frames, no problem, but trade in the direction of the higher time frames, and that's where the pre-analyze comes in play for you. If it's not clear, it's clear. What do I mean by that? If the setup and the market conditions are not clear for you, if the candles are zigzagging too much, small bodies, big spikes, back and forth, you have a hard time to define a trend and correction. If it's not clear, it's clear what you have to do. Skip that. God bless the forex market and the trading market in general. We have a lot of instruments. If there is nothing today, there is always tomorrow when it comes to trading. No volatility, low probability. That means sRs is trend riding, high momentum, high volatility trend riding system. That means if the price does not change, if the euro started the day at 110 and finished at 110.02, we cannot make money. Okay? Remember that. And it's very, very important to understand that, because if there is no volatility, if there is no momentum, no real trend that are moving in multi-time frame analysis, it's a low probability trade and we better skip it. Avoid overexposure. If you find euro dollar, euro yen, euro CAD, euro Aussie, euro New Zealand, euro pound, all of them giving you the same setup and the same analysis, you understand something is happening there. And it could be in your favor, but the chances are it will be against your favor. So do not overexpose. Choose the 1, 2, 3 that you love most. Split your total risk exposure in between them, and that's all. Do not overexpose to the same currency. It could be great, but most of the times it would be simply not great. Avoid end of sessions. If you find a trend conditions right before the session ends, it's something to avoid, because most of the chances it's going to be very, very, very slow and annoying until new money comes in. And of course, this part refers to intraday short-term trading. Okay, for those of you who trade the longer term, it means not much. What to do, what not to do. To do, pre-analyze for trends. Not to do, take every buy sell. Most traders, what they want to do is get an alert or get a signal from whatever it is and just click yes or no without doing any kind of a job trying to improve your chances. So do not do that, and I don't really need to explain the logic behind it. It's pretty speaking for itself. It's not smart. It's not smart. When you sit in the car at the most rush hour, when the most of the traffics are, and you just say, it will be fine, I'll go by this way, without checking on what's going around, be prepared to be stuck in traffic. Same with trading. If you do not properly choose your instruments in clear trading conditions, and it's better to trade one but clear rather than 20 that are not clear, well, be prepared, you will be stuck. Do trade high volatility and momentum instruments, those who move now. A lot of time I'm asked, Vlad, what are the best instruments? It changes. Today it could be euro, dollar, and pound, or tomorrow it could be euro and pound yen. Tomorrow, pound kiwi and the oil. What the market brings, that's where you have to be. And do not trade static market. If the market does not move, or any instrument you choose does not move, does not create clean pattern, skip that. Do wait for setup. Do not create a setup. Many traders, when they see that, many traders, when they see that, they say, it will be fine. But there is no trend. There is no clear ABCD. There is no clear triangle. They just put the lines and they say, now I expect that. That's a mistake. That's called a create a setup. You draw your wish. And here is the new for you. The market doesn't care what you draw. Respect the rules and do not make up rules to fit your wish. Many traders change the rules. So breakout. Now I will go with the spike. Now I wait for breakout on 1 pip. Now I wait for closure. Now I confirm with RSI. Now I confirm with MACD. Come on. Rules are there for logic. And after lots of tests, back and forward tests, try to change something that works is a mistake. Respect the risk plan and management, the one that you have before the trade. And do not overexpose yourself and over-risk yourself. Do not fool yourself with hopes. Tell yourself, it will be fine, or I believe it will go up or go down, is fooling yourself with hopes. Trade facts, not wishes. These things are critical for your success. And I would like to take the time and to thank you very much for watching this video. I hope you find it educational, helpful, clearer to understand your trading rules and what should be done and how. For any questions, please feel free to contact us at support@vladimirrybakov.com, and of course in a Telegram group dedicated to the systems. Now here you would find, here you would find an SRS page. Go to the login inside, and an SRS Pro tab, click join the SRS Telegram group. Myself and my team are there for you for any questions, ideas, setups, and help. So thank you very much for your time, and once again, I hope you find it useful, helpful, and I see you soon with more great content. Ciao for now, Vladimir Rybakov.